I feel like it's been too long since I've chatted with my good friend Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners. Craig, like the world has turned upside down and right side back up again a couple times since we chatted. I guess that's the news cycle we live in these days, my friend.
Yeah, John, it's bizarre how quickly everything can turn. I feel like I've been on a hiatus for your show because it's been a couple of weeks, but wow, the world looks different, and so does the price at the pump.
Oh, boy, doesn't it? And I'm now an armchair expert on WTI crude futures, even though I shouldn't be, but it is fascinating to follow them and really what that difference that makes not only at the pump, as you mentioned, Craig, but the long-term effects that this could have on inflation, depending on how long we go on. I mean, it's not minimizing it to say that this is a real big deal.
No, it's a very big deal. I mean, for the time being, it's going to remain like this. As goes oil, so goes the stock market. As goes oil, so goes the stock market. That's all anybody needs to know.
Do you think that as goes oil transitions at some point to, what's going to happen with the inflation data, the next read?
I think, the big danger here for me is the concept of psychology, John. You and I have talked about consumers bolstering, even though it's a K-shaped economy, we've talked about the consumer really running the U.S. economy. And the reality is, if you keep the negative news of high oil prices, both in a tactile sense at the pump and then what people hear on the platform of radio or see on TV, if this extends through the 4th of July, I think we run the risk of actually materially affecting consumer behavior, where that negative feedback loop of laying tracks causes consumers to pull back, which then causes companies to lay off more, and it's a self-fulfilling prophecy we don't want to get into. So we have plenty of time. It's only March, but the 4th of July and the 250th anniversary isn't too far around the corner.
It is kind of wild to think that vibes, which are just like a sense of how things are going, can impact how things go. Craig, that seems bonkers to me.
Well, it is. I mean, but then again, everything is about the wealth effect. Everything is about psychology. I mean, thankfully, in this K-shaped economy, those who have had the means have continued to spend and spend relentlessly, making up for everybody else who's on the struggle bus. But if night after night, day after day, you just hear about how the high cost of energy acts as a tax on business, acts as a tax on consumers, then people start pulling back incrementally relative to M&E, meals and entertainment, T&L, travel and leisure, and that's going to create this economic slowdown that we want to avoid. We came into the issues in the Middle East with a strong economy. In fact, I would argue the biggest trump card, pardon the pun, is that the U.S. economy is probably stronger than what consensus believes. That's been the good news and why this market has climbed a wall of worry for quite some time, but that gets threatened if the consumer becomes more fragile.
How worried were you when you saw the jobs report? I think it was last week's jobs report for the monthly number and the revisions too. Are you worried, or is it you got to give me a couple data points before I start stressing out about that?
I need 3 data points, 3 consecutive months before I stress out about it. But listen, it caught me on notice because we went from job creation to job loss. The fact that the numbers swung that far, that caused me pause on a Friday. Because, I start asking myself, do I believe the government data? Do I believe the private data? Which non-farm payroll do I want to look at? One way or the other, it kind of lines up with the feeling, though, the feeling that AI is, in fact, replacing workers. It's no longer just companies freeing up money to spend on AI. I think the impact of AI is here, and that's why I've said on your show, and I've said on the noon hour with the other John Williams, I think we could get to an unemployment rate as high as 5% by the end of the year, because I think we materially just start picking up the layoffs.
Which 5% is not great, but it's not the end of the world. I mean, that's not an unhealthy place to be.
I am pretty sure from World War II until today, the world has been just fine at a 5 to 5.1% unemployment. But, John, everybody has recency bias. It gets back to the consumer, right? So how does the consumer react when every single month they hear job loss and job attrition. And we have to remember that everyone's now connected because the internet has democratized all the information. So there's lots of people that didn't used to be in the know. Now the collective conscious for everybody is in the know at the same time, which is why when markets advance and when markets correct, we get to where we deserve to be so much faster because the news cycle is so much faster.
Craig Bolanos, who's always a great guest, our co-founder and wealth advisor at VestGen Wealth Partners. Craig, we're talking about AI, and anytime there's new tech, people freak out, right? This has been since the beginning of time when they figured out horses could do what some farmers could do. And I think we're in for a real revolution here in the job place. It seems like in these initial few years, it's actually the starting jobs that are more at risk, perhaps, than the more seasoned employees, which is kind of a flip of the script when there's new technology. Do you see that the same, that the young adults getting out of college, that's going to be a tough job market for a little bit with AI in certain fields?
Yeah, that's going to be a lot more volatile. I mean, John, you're speaking to somebody who's got a 23 and 24-year-old sons. So they're right prime starting into that workforce, that work-collar workforce, which appears to be the most in jeopardy. We've turned everything on its head. I mean, think about the writers' guilds. Think about the graphic designers. Think about the paralegals, researchers, you name it. The
coders.
list goes on and on. Coders. Where is it going to go next as we rotate sector from sector? I don't know, but I do know that if everyone asks themselves, what can I be doing that AI isn't going to replace and what isn't AI going to replace, and where can I put my money in the same vein that artificial intelligence isn't going to replace or reprice? Those are probably good secular thematics for employment and good long-term secular thematics for investing.
Yeah, everyone needs to, first of all, learn this technology themselves, figure out what they can do to enhance their own gigs if they have that possibility. And also, I feel like institutional knowledge is very valued at companies right now, and that's great. But I think that it would be foolish to think that it's only going to take the jobs of people that are 22 to 26. They're going to come for your gig if you're not ready for it.
They're going to come for, you know what? And here's what it is. The technology is not coming for your job. People who are using the technology are the ones coming for your job, right? That's currently where we're at. So all to your point, you know, people have a responsibility to themselves and their families to put themselves in a position to win. And that begins with education, which leads to empowerment. And someone always said, do your homework. Do your homework. So if you do your homework, you too can navigate the changes just as people have done during other inflection points in this great country.
What are conversations you're having with the folks, your clients at VestGen Wealth Partners? Are they worried these weeks, or do you feel like you guys at your team set them up to, they're going to ask questions, but they're feeling good about what the plan is?
Well, I tell you what, it's exactly that. It's reviewing the plan, John. It's all about getting retired and staying retired, and that's related to the plan. So we're bringing all of our discussions back to the plan. Then once we bring our discussions back to the plan, then we're talking about our 6 ideas, 6 for 26, so we can put people in a position to win, because at this place in the market cycle, you don't have to think outside the box, but we need to understand that the valuations are high, the stakes are higher, and how do we work within that uncertainty? And that gets into sectors, capitalization, geography, and all of the usual suspects. And when we talk about those things and make it a reflection of the end client, the authenticity of their voice, those are the conversations we're having at VestGen Wealth Partners.
You do great work. Great. GetRetiredStayRetired.com. Craig, you're always great when you're on with John. I appreciate you coming out with me. One day we need to get you on all the Johns. John Records Landecker after me, and we'll do a trifecta, Craig, okay?
I love the trifecta. Let's box it in.
GetRetiredStayRetired.com. Take care, Craig. Craig Bolanos always does great stuff.